It looks like depositors are finally realizing that everything is not fine in the banking system after all. As problems arise in the U.S. banking system, 48% of Americans are now worried about the safety of their currency in banks and other financial institutions. Perhaps the speed of these banking events are happening a little too fast for most. Let's talk about this. Interesting data just came out. With the failure of the Silicon Valley Bank and Signature Bank, it's made a lot of people worry. And this doesn't even take into account the failure of First Republic Bank and the ones that might follow. A Gallup poll done from April 3rd to April 25th found an increased worry and showed that people are just as worried as they were back in 2008 during the financial crisis. Of course, back then, Lehman Brothers filed for the biggest bankruptcy in U.S. history at that point, and 45% of adults in the U.S. were either very worried or somewhat worried about the safety of their currency. After the TARP bailout in 2008, only 41% of Americans were worried about the economy at that point. This recent poll shows that Republicans, independents, middle and low-income adults, and people without a college degree worry about the banks than other groups. 55% of Republicans and 51% of independents are at least somewhat worried about the economy, but only 34% of Democrats feel the same way. 54% of U.S. adults without a college degree are very or somewhat worried, while only 30% of those with a college degree feel the same way. About half of Americans whose household income is less than $100,000 per year worry about money, while only 40% of those with higher incomes feel that way. It's interesting that partisanship seems to play a big role in how people feel about this issue. In September 2008, when Republican George Bush was president, 55% of Democrats were either very or somewhat worried, but only 34% of Republicans were. After the government bailout and Barack Obama's presidential win, Democrats and independents were less worried, but Republicans were 8 percentage points more worried at that point. You see the flip-flop there, right? The bottom line is that about half of Americans are worried about the safety of their currency in the banks and other financial institutions after several high-profile bank failures. This level of worry is similar to how people felt during the financial crisis of 2008, when institutions that seemed to be too big to fail actually went bankrupt. But it's still not clear if Americans are more worried because they don't trust the FDIC to protect small accounts, or because they're afraid of a snowball domino effect that could hurt the FDIC or even worse. Most people don't know that the FDIC insurance scheme is just that, an insurance scheme. It was made after the last big banking crisis, which was caused by banks failing. The FDIC started on January 1st, 1934, and their first amount of coverage was $2,500. After 89 years and several banking crises later, when the dollar amount went up, it definitely played with people's emotions because it made people feel more comfortable and confident that by adding a couple zeros, it'd be less likely that they wouldn't be made whole if something was to happen again. Before Congress raised it in response to the worst financial crisis since the Great Depression, the FDIC insurance limit had been set at $100,000 for almost 30 years. The Great Financial Crisis forced banking regulators to raise it to $250,000 per depositor, as well as per insured bank for each account ownership category. But unfortunately, as more banks fail and people lose faith in the system, people will realize that being told a number with a bunch of zeros after it is just a trick to keep you from going to the bank to get your currency out. The last thing they want is for everyone to go to the bank at the same time, because that will reveal that the bank is a bunch of ones and zeros on a screen anyway, and that this entire scheme is just one big lie. The average person has no clue that there's nowhere near enough cash in comparison to the amount of ones and zeros on the screen inside their bank. And this is just not a domestic issue. This is a global issue we're talking about here, because all banks are the same. So now that almost half the depositors are experiencing anxiety over a few banks having problems, how concerned do you think Janet Yellen, Jerome Powell, and the Biden regime may be, knowing that people real soon might test and see how sound and resilient the banking system really is when it comes to more people attempting to opt out and go down to the bank and get their cash while they still can? In my opinion, it's only going to get ugly from here, because the figures I'll just share with you right now is from last month. And so here we are now in May, with First Republic Bank going through issues, but now we got PacWest, Western Alliance, and all the other banks that are up next. So it's good to say that the next time Gallup does a poll, these numbers are going to be even higher. So what can you take away from this? If your average Joe is starting to wake up and realize that something's wrong, hopefully you've already been taking measures to limit or to completely alleviate your dependence and reliance on this banking Ponzi scheme known as the FDIC and all the broken promises that are soon to be revealed. Anyway, thought I would share my thoughts. What do you think? Does a 48% banking concern amongst depositors from a month ago surprise you at all? Leave a comment down below. If you found any value here, please take a minute, share this so people can find out what's going on. Hit that thumbs up button, and I'll see you on the next video.